What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell for me so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers under no circumstances. So please be careful. Don't get yourself scammed. If you want 6 free stocks, Webull is going to give you 6 free stocks when you open up a new Webull brokerage account. Put at least 1 penny in that account. They're going to give you 6 free stocks valued all the way up to $12,600. So after the video, I want you to go down to the description box of the video. Click on that Webull link, open up your new account today, go get that free stock, go get that free money. It's official, guys. The Federal Reserve has increased short-term interest rates by 75 basis points. The June CPI numbers came out and they were 9.1%. And the prior month, which was May, CPI numbers were 8.6%. So the Fed felt like they really needed to do something in order to impact inflation and start bringing inflation down. We have seen the Fed over the last 2 months raise short-term interest rates by 150 basis points. Guys, we have not seen that aggressive rise in short-term interest rates by the Federal Reserve since the 1980s. So that tells me the Fed is serious about getting inflation down to the target 2% that we need to have in order to have a healthy, sustainable economy. Now, one of the things the Fed Chair Jerome Powell said today in his remarks is that he does not believe that the United States is in a recession. And the reason he believes that is because there are a lot of economic measures out there that say we're not in a recession. And one of those is the labor market. We have such a robust, strong labor market. On top of that, we have all-time low unemployment at 3.6%. But that's a double-edged sword, though, because I think one of the reasons why we have runaway inflation is because of a very, very strong labor market. Everybody's employed, wages are up, unemployment is low, and people continue to spend. One of the things Fed Chair Jerome Powell mentioned was, in order to get inflation down, we will need to see a softening in our labor market. He does not mean to the point where it's detrimental to our economy, but he does mean we need to see a softening in the labor market because we need to have demand go below supply. What causes inflation is because we have runaway demand, but we don't have enough supply to meet that demand. That's what causes inflation, guys. That's what causes prices of our goods and services to increase when we have more demand than we have supply. One of the reasons we have more demand is because of that strong labor market, right? So he thinks a softening in that labor market will allow demand to come down and at least get it on par with supply. He would also like to see demand actually go below supply so that we can have sort of a cushion in the economy. There's no way inflation can stay at 9% and we have a healthy economy. That's not going to happen. It can't happen. So we got to systematically over time get inflation back down to that 2.5% target rate. We got to get it back down to that. The encouraging thing is the Fed understand that. So they're not going to be outrageously hawkish with interest rates. Now, remember, they will be meeting again in September of this year, right? And that will be their last meeting for the third quarter of this year. At that meeting, what Fed Chair Jerome Powell said was they will look at the data at that time. And if the data requires them to be hawkish on increasing short-term interest rates, they will. That's not off the table. But they won't just give forward-thinking guidance that says we're going to raise interest rates by 70. They're not going to do that. They're going to wait, look at the data, and whatever the data requires, that's what they'll take when it comes to the appropriate rate hike. Could be 25 basis points, could be 50, could be 75, could be 100. They won't know until they see the data. And that's encouraging, right? That's encouraging to investors. That's one of the reasons why all three major indexes, the NASDAQ, the Dow Jones, the S&P 500, all bounced. They all increased, right? When Fed Chairman Jerome Powell gave his comments today. A lot of folks thought it would be a reversal and that there would be a sell-off. No sell-off. Why? Because I think investors already had priced in the 75 basis points. They knew they had to do something. But the 75 basis points, they had already priced in. And I think investors understand that the Federal Reserve is not going to be just hawkish to be hawkish. Their goal is to do what? Have a healthy economy. And the way to have a healthy economy is to have inflation around 2 to 2.5%. And guess what? The market has spoke. They believe them because look what's happening in the three major indexes. They're all in the green, guys. They're all up. Now, GDP numbers are going to be coming out tomorrow, which is Thursday, July 28th. So when GDP numbers come out, if GDP is negative for the second quarter, technically we're in a recession, because if you have 2 quarters of negative GDP, technically you're in a recession. But even that, I go back to what Fed Chair Jerome Powell said. He does not believe we're in a recession, no matter what the GDP numbers say, right? And he points to, again, there are strong economic factors that are doing very well that wouldn't be doing that well if we were in a true recession. And I believe that, right? And like I said, one of those is a strong labor market, continues to be strong. Unemployment continues to be low. Wages continue to be moderate, right? Not drastically decreasing, not drastically increasing, but right in the middle, right? So that's good news. And again, guys, as investors, what we should be looking to do is continue to dollar cost average into the stock market every single week, every single month, buying our favorite companies, right? Buying our favorite ETFs, buying our favorite cryptos, because we still have a stock market that's on sale. We still have a crypto market that's on sale. Now, the real estate market, housing market is not on sale just yet, but it will be at some point, I think, over the next 12 months. But until it goes on sale, really, we should be concentrated on the stock market and the crypto market if we want to buy assets at a discount, because they're still trading at discounts, guys. And here's what we should be thinking about. We should be buying these assets at a discount, holding them, or being prepared to hold them for at least 5 years minimum. So all the assets you're buying now, whether it be crypto or whether it be stock market assets, you should be buying them with the attitude that you're going to hold them at least 5 years. Because I think if you do that, that's where you give yourselves a really good chance to increase your net worth and put net worth in your pocket from these assets that you're buying at heavy discounts today. So that should be the game plan, guys. That's my game plan. Again, not your financial advisor. I'm not trying to tell you what to do with your money. I'm just giving you guys my opinion on what I believe is happening in our economy and in our stock market. I think if you want to build wealth, no matter what you're hearing out there, the stock market and the crypto market are great places to deploy money into right now. And if you, like I said, if you got that 5-year minimum wait or hold pattern before you want to sell anything, then I think you give yourself an opportunity to increase your net worth and increase it in a big way. At least that's the game plan and the financial plan that I'm going to be taking on, right? If you want those 6 free stocks from Webull, click on that link down in the description box. Open up your new account today, guys. Go get that free stock, go get that free money. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness, never stop believing in yourself, and I'm gonna catch you on the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.